Good morning, traders. This is John Kennedy in Chicago, Senior Commodity Market Strategist with RGO Futures. Just to give you a brief rundown on some of the interest rate markets here this morning on Tuesday. First of all, the SEP 10 years trading at 124 even, down about 6 ticks for the day. The 30 years trading at 134.27, down about 13 ticks. The bonds traded higher in the overnight, but have turned back towards negative as the U.S. came into the stock market open here. The recent bearishness in bonds can be attributed to improving economic indicators both here in the U.S., obviously evident in the stock market, and also some economic indicators out of China as well. Also, we have a supply of new treasuries coming on the market this week, which will weigh on the markets for a while as well. The Treasury is selling 28 billion three-year notes today, followed up by 21 billion 10-year notes tomorrow, and then wrapping it up with 13 billion 30-year bonds on Thursday. A couple things to keep in mind. There's been a somewhat positive tone from Asia, also with the U.S. stocks up over the past really 10 days. The S&Ps are trading about 1947 and 3/4, down about 2.5 points today. The NASDAQ is actually up, so the U.S. stock market is slightly mixed. As I mentioned, the S&P 500 cash index has posted record highs 8 of the last 10 sessions, and that obviously in the near term is going to be bearish on some of the treasury markets. Technically, both the 10-year and the 30-year bond are in a short-term downward trend with falling momentum, and also keep in mind in terms of daily stochastics, they're both in the oversold territory, which you would think could mean some of the selling is drying up and you get a bit of a bounce. Something also to keep in mind is last week's European ECB policy announcements, which might make the U.S. treasuries more appealing than some of their European counterparts. That's all for today. Good luck trading. This is John Kennedy in Chicago. Futures and options on futures may involve substantial risk and may not be suitable for all investors.